Welcome to Real Estate Coaching Radio, starring award-winning real estate coaches and #1 international best-selling authors, Tim and Julie Harris. This is the #1 daily radio show for realtors looking for a no BS, authentic, real-time coaching experience. What's really working in today's market, how to generate more leads, make more money, and have more time for what you love in your life. And now your hosts, Tim and Julie Harris.
Welcome back. It's Tim and Julie Harris. This is Real Estate Coaching Radio, and we are going to be talking about a topic which is on everyone's mind, of course, real estate commissions. But what we're going to be sharing with you is what happens in this post-commission sharing lawsuits world and how you're able to finance commissions, all the different ways that they're going to be paid. So you need to be taking lots of great notes for today's show. Julie spent a lot of time on this topic, like probably more than the normal show, probably a few hours, just to write this outline for all of you. You're going to want this outline. You're going to want to share it with everyone in your office, your team, all the normal constituents of your life that are interested in the real estate industry. And the only way to get our notes is just to go to harrisrealestatedaily.com. That is our daily newsletter, thus the name. And that's where the podcast lives. That's where the notes live. That's where a lot of proprietary, content that we create just for newsletter subscribers. So please go to harrisrealestatedaily.com. All you got to do is drop in your email address into a little box. And then you have to double opt in, confirm that you want the subscription, and then you're off to the races. So Julie, great topic, and let's roll in.
Yes. Okay. So we're not going to discuss the actual commission lawsuit because I think we all discussed that to death last year, and we all know that it's gone down and it's over with, right? So today we're going to talk about the results of that and first we're going to do some stats, right? So the current commission landscape, what does that look like?
Well, Julie, before we start, just so these guys are understanding that we're not just going to rehash old information, what is the real objective? What is the goal when you were writing this? Because I know you wrote this obviously for our podcast listeners, but you also had a lot of coaching clients and whatnot that were very interested in this information. So what is it that how are they going to benefit from actually listening to today's show?
Well, number one, they're going to know what the facts are because there's all kinds of stuff, agents talking to each other online, arguing about what's happening in commissions, not happening. It's been all stripped away and no buyer's agent's ever going to survive, all that kind of like last year type stuff that they're still arguing about. So first, we're going to look at what actually hasn't happened to commissions. It's not just eviscerated. So we'll talk about just a little section on facts so that they can get that straight. Second thing we're going to talk about is new construction commission rates, and we're going to talk about how you can indeed roll your buyer side commission into a purchase loan. There's a lot of argument online about that, and it is true that used to not be possible, but now it is possible, and I'm going to give them exactly what to do and how to find out. It's not 100% on every single deal, but there is an actual protocol in place now to make that happen.
Well, let's stall out there. Let's stall out there, sweetie. So sure. By the way, get the mic a little bit closer to your mouth.
Yep.
So you're saying that what you and I predicted in third and fourth quarter of last year about financing of the commissions on the buyer side has actually worked out exactly as we anticipated it would. And it is funny, the people that are now sort of waking up to the new year in the spring market, worrying and realizing the commission sharing lawsuits and the landscape has somewhat changed. They're the ones that weren't paying attention at the end of last year. So, for those of us who are in the business every single day, living and breathing, if we're now rubbing elbows with folks that are like going, what the heck are you talking about? Well, forgive them because last quarter they weren't really paying attention. And now they're back in the market. So have a little bit of, patience.
Some grace.
With all of them. That's right.
Yeah, that's true. And remember that 71% of agents didn't sell anything last year. So there are agents that are now reinserting themselves into the pre-spring and spring market. And now they're kind of like back in action and they're cooking 2 or 3 deals. And now they're reading all this stuff and they're like, oh my gosh, I wasn't really up to speed on that. So what's actually happening? So let's jump into the current landscape just for a second. The fallout from NAR, effective again since August 2024 last year, has had a little bit of a shift, right? But it hasn't been catastrophic. According to Redfin, they did a survey last month. The average buyer agent commission is at 2.37. That's more than it was at the end of last year by a tiny bit, but it's a little bit less than before the settlement. It was at 2.45. So let's just look at that. That's not like going from 2.5 to nothing or to even 2. It's just inched down a little bit, okay? And that's not just a Redfin thing. Zillow reports the exact same thing. The decline reflects that sellers are testing the waters a little bit, but also that things that are closing are hanging in there right around 2.5%. And I think you have examples and our coaches have examples of many transactions that are closing at higher than that average as well.
But
So
it's worth pointing out that it's how many people were absolutely 100% stone cold wrong about
yeah.
again, it's all about who you guys listen to, especially in a market like this. But how many were predicting, buyer agent commissions were going to go away, and all these other things. And they're also how many headlines were happening last year where it's they're all anticipating some sort of apocalypse of real estate agents. Half the agents in the country will be gone by the spring. None
Yeah,
of those
yeah.
things were true. Exactly. Well, it won't happen. Yeah.
No, it won't happen. But here's what is happening. And this was reported by Housing Wire. They did, it's like time to do surveys, I guess, first quarter surveys, what's actually happening out there. And Housing Wire did a survey. What is happening is that 68% of agents are reporting that they have to actually discuss commission now. Okay, big light bulb there. And they report they're having harder commission discussions. This is why a lot of what we do in Premier Coaching is showing them how to be an ethical real estate professional, how to use a real buyer presentation, and to show why you get paid your commission. So those discussions are indeed happening, at least amongst people who are. So again, it's not that commissions are coming down significantly. We're talking about micro percentages, like 0.1%. What is really having to be dealt with is the conversation itself. And again, that's why we upgraded many things in Premier Coaching. We've always taught to use the buyer presentation. That's just what you're supposed to do. Treat your buyers as well as you treat your listings. But we've also added ethical real estate professional, what makes you different, because you are having to have those conversations. That's not just from the Housing Wire survey. That's from lots of coaching calls where we talk about this type of thing, right?
Julie, how has increased inventory also started to push up buyer agent commissions, which is again something you and I were seeing last year?
Yeah.
That's kind of fascinating too. It turns out, hey, guess what? Incentives matter, right? And if you want to get your listing sold or your new construction sold, you better be offering at least market rate, if not above market rate commission, or you're not going to get any showings and you're not going to get any sales.
This is absolutely true. And that was a great segue to what's happening with new construction. One of the things that you can do as a resale agent is to monitor what are the builders doing and meet or beat what the builders are doing, because the builders also have economists on their staff and they are doing projections and outlooks and statistics, and they have more inventory to sell than you do. They have entire subdivisions that they need to move. They've bought land that they have future plans for. So they're pretty frosty on this stuff. Wouldn't you agree, Tim? Like, watch what the builders are doing.
Well, absolutely. I mean, the builders are, they're the best barometer of what's going to happen next. If you want to know what the tea leaves are, if you're wanting to, dust off your crystal ball, just see what new construction's doing, because those guys are hyper focused on land development costs, effects of inflation, effects of the tariffs. They're watching interest rates, all these things. So they're looking frankly, sometimes as much as a year into the future. Builder confidence surveys and all those. You can pay attention to a lot of those types of reports that come out. And they're absolutely very sensitive to it. And I'll tell you what we're seeing is that the builders are anticipating a kind of a boom for sure, but they're also being very sensitive to the fact that they need to keep people's house payments within a certain range. There was a report that came out, Julie and I talked about on the show yesterday, that just to make it very simple, that the average, people say real estate's too expensive. And you could argue that that's true, but really what's too expensive are payments. And if you see builders offering all kinds of creative financing to get monthly payments down, that should be a good indication of what direction the market's going, because that's costing them money. So they're actually taking money that they could have been putting into their pockets, and they're buying the interest rates down. So if the builders wouldn't be doing, preferential financing like that, if there wasn't there, if they didn't have if they weren't trying to be competitive, but B, if they weren't anticipating that there was going to be some more pushback from higher payments unless obviously interest rates start to fall. So hopefully that makes sense. And we do teach you guys how to be competitive with new construction builders with their creative financing in Premier Coaching. So make sure you're tuning into that. We've done a ton of podcasts on that. And if you're not aware of new construction, if you're one of these agents that are just coming out of your bear den for the spring.
Hibernation.
Exactly. Hibernation. You better be tuning into the fact that everything has changed really, I think in the last 4 months for sure.
Yeah, that's right. So the builders have a bigger crystal ball and it's more robust and they have so many different things going. So it is very good to pay attention to that. And part of that is their reaction to more resale inventory as well. So we're all in the same bucket. And that brings us back to the commission conversation. New construction commission rates are interesting. They often are offering higher commissions to attract buyer agents. The National Association of Home Builders, NAHB, reports an average countrywide of 2.8% versus on resale of 2.4%. That's from their most recent builder survey. Now, builders like KB Homes in San Antonio and surrounding areas are offering up to a 5% buyer side commission. Some of our coaching clients have reported up to a 6% buyer commission, an incentive that some builders are offering for putting homes in contract by a certain date, or a certain list of homes that are spec homes, homes that people have backed out at, or maybe they overbuilt a certain area. Whatever the reason is, they've got a surplus of homes. So they're putting both the financial incentives that you talked about, rate buy downs, but also incentives for agents to show that. So think about it from a resale agent standpoint. If you've got that in your backyard and you're being all fancy about, because of the commission lawsuits, we don't have to pay our buyer agent anymore, and you're wondering where your showings are, maybe you can connect those dots. Now, back to your earlier point, Tim, back when maybe that same resale home 2 years ago was the only thing on the market, and even in its competing neighborhoods, there weren't any choices, and the builders were building, but it was all dirt. Well, maybe you could push around the buyer agents a little bit more, but not so. In most places, that's not the case anymore.
Yeah, commissions go up when the market starts to become a buyer's market, or at least a balanced market. Now, maybe even some markets, a buyer's market. Commissions go up. That's the way it always works. It's called supply and demand. It's called,
Incentives.
Incentive structures. That's all we're talking about. Commission sharing lawsuits aside, the market's going to react the way the market's going to react. It is what it is. And then it is a good note here that when you walk into a builder's new build model and there's no agent, you're not bringing an agent along with you. This is you, non-licensee you. You're not going to be able to get that builder to reduce the price of the house commensurate with whatever the commission would have been had you walked in with a real estate agent. So there's no incentive structure around buyers to cut out their agents when dealing directly with new construction. So, kind of interesting thing to think about. And yeah, we do teach you extensively how to really make the builders, maybe in your market, the builders could be your single best source of transactional volume this year. And, in some markets, it's just extraordinary, the opportunities. And some of you guys are thinking, well, we don't have that in my market. Yeah, you do. You just aren't looking in the right place. You're
You
not
probably
looking...
do, or the county next to you.
Exactly.
Right. So just because it's not in your personal favorite MLS code doesn't mean that it doesn't
Exactly.
exist. Right. So yes. Now back to the builders just for a second, then we're going to talk about Fannie Mae and how to roll commissions in. The builders are competing also against each other. And in their survey, they also proved that the incentivized homes, because it's not across the board, it's a certain list and it depends on the community, on the price range and all the rest. But the homes with incentives are selling 20% quicker. You can also translate that into your resale brain as a listing agent. Maybe you want to put some incentives on yours. Maybe you want to incentivize some money from the seller to the buyer towards their closing costs. They don't have to go to the extent that the builder does, but you certainly want to stand out versus all of your competition in the neighborhood. So let's talk about Fannie Mae. Fannie Mae's updated policy, effective for loans delivered on or after June 1st of last year, because they saw the commission lawsuit coming, they started updating it. It was clarified just last month because there was a lot of confusion about this. They do allow lender credits for buyer broker commissions to be rolled into the loan, applicable to both new construction homes and resale homes. Again, according to Fannie Mae. Now,
can you explain that?
Yes.
So you said lender credits are, say that again and talk to me like I'm a 5-year-old.
All right, that's okay. So Fannie Mae's updated policy, which was just clarified last month, allows lender credits for buyer broker commissions to be rolled into the loan, both on new construction and on resale. So don't think that this only applies to new construction. You can do this on a normal transaction. However, in order to do that, you have to follow what is called the Fannie Mae selling guide. Of course, there's regulations, right? So, and in our notes at harrisrealestatedaily.com in the newsletter, I have given you a copy of the Fannie Mae selling guide, so you can look it up. This requires, it's not that complicated, but here's what it requires: a written buyer broker agreement. You're supposed to be doing that anyway. A reasonable and customary commission. That's probably one you're going to get anyway. And adherence to any loan-specific closing cost limits. That's going to depend on the purchase price of the house. For instance, a $300,000 loan, adding a $3,000 commission, 1%, maybe 2% was covered by the seller. You want to add 1% in. it increases the monthly payments by about $15, depending on the rate, making it feasible for buyers without upfront cash. So you can see that it still has to stay within normal commission rates, because if you're trying to throw 5% on, maybe that would raise the buyer's payment to the point where they wouldn't qualify anymore. It would wreck their ratios. But you can certainly roll in 1, 2, or maybe 3%.
Jules, let's make this practical, okay?
Sure.
We started out talking about new construction. We don't want to confuse you guys. What Julie is now saying is that if you have a borrower that is in a situation where the seller listing agent won't pay the buyer agent commission,
Or won't pay all of it.
Or won't pay all of it. She's giving you now the formula to get your buyer agent commission paid for as part of the loan, right? So that's what Julie is describing to you right now. And I assume that obviously the house would have to appraise with the commission rolled in, but that's where we're going. That's where we're going with all this. So again, we were preparing all of you guys for this last year, and indeed it's happening. So don't fear that the market's not going to, that there's, first of all, I'd be shocked if you're really running across too many sellers that aren't willing to pay a co-op. I mean, given what's going on in most of the country.
I have a fact on that.
Okay. Of course you do. Go ahead.
Again, latest reporting, Redfin reports that only 12% of buyers are having to pay all or part of their buyer's agent fee so far in the first quarter of this year, 12%. Now, the reason we bring that up, to your point, it's not going to be every deal. It's basically standard issue for the most part, or the builder's already paying it, or whatever the case may be. 12% of the time, part or all of the commission has to be paid for the buyer. What we see agents doing when they discover that, for whatever reason, the listing the buyer's trying to buy just isn't cooperating at the level that their agreement says, a lot of agents are just caving and saying, well, if that happens, then I'll just work for free. That's not what we teach you in Premier Coaching. First of all, this is only happening in 12% of the time. Second of all, you need to have a script to cover yourself so that your backup plan is not to just get paid nothing. And if they're not being paid nothing, then they're saying, well, I'll only charge you $500. This is a way, specifically using the Fannie Mae thing, that you can just roll it in without really affecting the buyer's payment by hardly anything.
Well, Julie,
However,
let's take a side step, okay?
Sure.
Let's say you're dealing with properties that are, I'm just thinking some of you guys are going to be dealing with lots. You're going to be dealing with inexpensive properties. You're going to be dealing with properties where it just isn't really worth your time to, work in that price range, or work in just the complexity of it, just different things.
Sure.
And you don't have to charge a market rate commission. You can charge a premium commission. You can charge more than a market rate commission. We teach our coaching clients how to do this too. So if you're going to go and list something that's like, a double wide, it's on beautiful land, but it's far away. It's just a cranky seller, the whole thing. There's nothing that says that you cannot charge a commission, and the seller, obviously has to agree to it. Now, what if you're on the buyer side? What if the buyer is asking you to, ask you to try to find them something that's really hard to find, that's going to require a lot of extra time? And most of the co-ops for things that they're looking for are going to be 2.5 or 3%. You can charge that buyer a premium commission because it is that much extra work. And then if they're, money tight, then you can explain to them how they can roll your fee into their financing, all or part of the fee into financing. So what that should do is hopefully helps you to realize that commissions are obviously negotiable, but they're not always, it doesn't just have to mean they're negotiable down. You can negotiate your commissions up.
Yes. Good point.
Yeah. I mean, that is really what this is going to allow for all of us to be able to do, is if you're in a marketplace where you're having to work with a buyer when they're wanting to buy something that's unusual, and you want to work with that buyer and it's taking like 10 times the effort and time that a normal buyer would, why don't you say, I'll be more than happy to help you, but my commission is going to be whatever the co-op is, plus, 2%, 3%, or whatever it is. Oh, I don't have the money, or I'm worried about that. Well, we can roll it into the financing, and this is what the effect it would have. And you explain to them using the system that Fannie Mae has created, that Julie's going to give to you guys when you subscribe to harrisrealestatedaily.com. And yes, we are doing a ton of coaching on this in Premier Coaching. If you're not a Premier Coaching client, And hey, this is about the best time you could possibly have to join Premier Coaching. It's the spring. Everything's a lot more complicated. You're going to have a lot higher level of education and knowledge. Otherwise, you're not going to have any confidence. So what we're doing is on this podcast and all of our podcasts is just giving you a tiny little dose of what you get in Premier Coaching. Remember, Premier Coaching includes a daily semi-private coaching call with one of our Harris certified coaches. So absolutely positively join Premier Coaching. You just go to premiercoaching.com or just click the link below in the show description. And remember, again, you can join Premier Coaching right now for free. And there's no contracts, there's no gotchas. We know this is the perfect coaching program for you. And we're also 100% certain that there's never been a better time for you to join Premier Coaching than there is right now. So go to premiercoaching.com or click the link below. Julie Harris?
That's right. Especially if these commission conversations with your buyers are freaking you out. I wonder how much of that statistic that 71% of agents didn't sell anything last year. I wonder how much, it's not nothing. I don't know what percent maybe you would guesstimate that is that they were afraid to have the conversations and they just weren't doing their lead follow-up at the highest degree. Maybe they weren't closing on that appointment because they were afraid, now I got to get that signature. Now I've got to do a buyer presentation. What do I do? How do I handle that? Maybe I'll just see how all this works out next year. That's, waiting is not a plan.
Hey,
so,
Julie, I'm going to
yeah.
point something out will make you
What's
laugh.
that?
Are you watching in the video how your shoulders keep on disappearing?
Oh no.
Do you know why
I
that
do have
is?
shoulders.
It's your
Is that
shirt.
too close? Oh, my shirt's too bright.
Yeah, no, it's the shirt. It's basically, it doesn't know because you have your
Good
blurred
shoulders.
background. Yeah, there you go.
It is
Well,
weird.
keep doing that. I know.
Okay.
So as we warned you guys about a month ago, we're going to try to do most of these on video and
We're
you're going to
learning.
have to,
Me especially.
you're going to have to you're going to have to bear with us as we're trying to figure all this out. You guys wanted us to be on video. We're on video.
You
As
asked
much
for it.
so if you see Julie's shoulders disappearing, well, that's just part and
There we
parcel of
go.
what
All
happens.
right. There we go.
Yeah.
Going to be close enough to the microphone, but far enough that I have shoulders. Okay. So let's just put a cap on the Fannie Mae thing because this should enable you in most cases to roll in all or part of the commission. And in most cases, it is just like 1 or 1.5%. It hasn't been so far all of the commission because, again, on average, going back to the beginning of the podcast, on average, deals are settling at about 2.45% to the buyer agent anyway. So maybe 12% of the time, you're going to have to deal with rolling it in. How do you do that? Again, I'm only going to give the bullet points. The real details are in the newsletter. So to determine if rolling commission into a loan is possible for a resale, first, you have to confirm that the buyer's lender is participating in Fannie Mae's lender credit program. That's what it's called, Fannie Mae's lender credit program for buyer broker commissions. Second, ensure the buyer has a written agreement with the agent. Again, you should be doing that anyway. Number 3, verify the commission is reasonable and customary in the area. You can just put that into Grok. You can put it into Redfin. Reasonable and customary. They don't really say if you go past this, it's not reasonable and customary. Just use your own best judgment on that. And then last but not least, check loan specific limits because total closing costs, including the commission, has to fit within the Fannie Mae guidelines. And that does vary by loan type and by down payment. So where you might not get away with this is if you have a really shaky, like a first-time buyer that's doing 3% down and their ratios are screwy and their credit's not great, and now you try and do this on top of that, that might not fly because maybe that's just a step too far for that program with the lender. In most cases, you're going to be fine, but it does have to meet their qualification. That includes things like the buyer has to have sufficient credit and income, and let's see, 3%, not to go over 3% of the loan amount, things like that. But the lender will tell you that. It's not, you don't have to know all those things. Yeah.
You just said something. So not to go in, again, this is stuff we will really drill down on Premier Coaching, but when you're doing a government-backed loan, the house can appraise, they'll help me remember how this, I don't
depends on the type of loan, but it ranges, I think, between 3 and 6%. You can never go over 6% of the appraised value or of the purchase price. I'd have to look up which it is.
Appraised value.
I think it's appraised value.
If the appraised value is 500,000, you can actually finance what Julie just said above what the appraised value is, and that's basically how you can potentially roll in some of these fees and whatnot. And remember, even with interest rates not being the greatest ever, you're still talking about a very minor league amount of money extra per month. And most buyers don't stay in the house, but 7 years anyway. So there you go.
That's right. That's right. And remember, they can refinance at any time. They can sell it at any time. So There you are. The last thing I wanted to talk about this is the alternative strategy. You just alluded to it, not actually rolling it into the loan per se, but putting it on top of the purchase price. Some agents consider increasing the sale price. I know we would do that every now and then, even without a commission lawsuit, to be dealing with all of this for different reasons. But you can consider increasing the sale price to cover the buyer agent's commission, assuming, again, to your point, Tim, that it appraises at the higher value. You can't just make up any amount and go as high as you want. You have to have some comps within reason. But fortunately, in this case, most commissions are 2 or 3%. So unless the house was really overpriced and you're in contract at that really overpriced price, and then you try and go even higher than that, that's not usually the case, especially now that we have more inventory and people are negotiating and we don't have as many competitive offers. You can usually go 2 or 3% over, and it usually will appraise for that. So for example, a $300,000 house with a 2.5% or $7,500 commission could be listed at 307.5, for example, if that's how you're going to bake in the buyer agent commission. That's fairly common. And in fact, I think you would agree with this, Tim. That's probably how builders are doing most of their incentives, is it's just baked into the price anyway.
Oh, for sure. They're just, yeah. I mean, that's
It's
the
not
reason
weird, in other words.
average new construction, I would venture a guess, is probably $30,000 to $50,000 more than what a hypothetical equivalent resale would be, for all the normal reasons, but also because they're probably taking, 25 grand of the money and they're putting it aside for obviously preferential lending. That here's another little funny fact. If you go to these builders and you say, I'm going to pay cash, or I'm not going to use your preferential lender, you don't, they're not going to give you a discount of what they would have otherwise
No.
spent on buying down the loan rate. So again, incentive structures, they're not in any way reinforcing the buyer not working with a buyer's agent when working with new construction, just the exact opposite. So open your mind to that as an enormous opportunity. Julie and I did a couple of podcasts, but one in particular called Make Housing Great Again. Julie, somebody got cranky with us on Instagram saying, how dare you steal Trump's slogan? No, we were predicting that Trump will
Reporting on
call
it.
his pending housing plan, which we are also predicting. No housing plan has been announced, but Julie and I are reading the tea leaves, and we're expecting that he's going to call it Make It Housing Great Again. We didn't steal the name. We're suggesting that that's the name that he'll use. But when that program does get announced, you're going to see a lot of different kinds of mortgage products come out through Fannie Freddie. You're going to see all kinds of everything's going to change. It's going to change really, really quick. I would venture a guess, based on what we've been seeing over the last even week, that there'll be a tsunami of new mortgage products and frankly lower rates and lower cost of getting the loan in the first place that'll all start hitting the market. I'm guessing by probably no later than June. So be anticipating of that. And I know some of you guys are struggling with the start of your year. It's definitely the slowest start of the year I think we've had since 2013, Julie, wasn't that it?
I think that's right. Yep.
Right. But so what's going to happen is that that doesn't mean that there's not people that still want to buy or still want to, sell. There's still millions of transactions that are going to happen. But when you see a slow start like this, all that's happening is people are just putting off their buying or their selling by a month or two. So you guys are going to have what most likely will feel like an almost uncontrollable boom market that's going to start. Usually, we're expecting it to happen around June, after the Make Housing Great Again program gets announced. Again, we're guessing on the name, but we think we're right. So yeah, that's what we all have to look forward to, but open your mind to the possibilities. And Julie was talking about, we're focusing a lot on first-time buyers with regards to this, but you could use this type of thing when you're dealing with any kind of properties, horse properties. Maybe you've got some sort of big ornery, 1,000-acre, all kinds of strange effort necessary to get the property sold. And, you could, and you're representing the buyer, and the buyer agent commission is, whatever it is, and you're having to put all this extra effort in, and the buyer doesn't want to have to pay you any more on top of whatever the co-op is. You can now figure out how to generate an extra source of revenue for yourself to compensate yourself for the time. There's nothing wrong with getting paid for your time. Yeah. There's nothing wrong with getting paid for, providing superior service. That's called a capitalist economy.
Meritocracy.
Exactly. Yes. Meritocracy. That's what you're supposed to be doing. Don't just think that when pressed, you have to reduce your commission. That is just you running out of ideas. And Julie just gave you a lot of great ideas so you guys can actually boost your commissions, especially into this new housing boom.
Well, that's right. And the thing is that I think we've had so many years where things were somewhat standard issue Everything was appreciating about the same rate. Commissions were basically the same thing. We all had multiple offers, and that seemed to become normal. And for a few years, it was normal. So now what we're talking about, one of the reasons why I wanted to cover this on this podcast is agents are required now to think out of the box,
Yep.
to be more creative. You now have to negotiate at a higher level for yourself. That's okay. That's why we have Premier Coaching. I know that this seems weird to some of you, but I think, Tim, you would hopefully agree that this is a good thing. Things are going to ramp up with the new housing boom. One of the things that I was thinking of as you were talking, two things. One is, what is his name? Besant, that interview we heard this morning. I don't know if you caught, he said that next week there's going to be somebody, I think elected or confirmed or put in place, that will be called an affordability czar. And that goes right into housing because they're actively working on the affordability part of this. So that's one thing. The second thing, when you were talking about different types of loans and how the expanded marketplace will deal with this, I don't know if you remember this after 9/11, when there was also a lot of uncertainty in the market. That's something that we're hearing from a lot of agents is when they talk to people, they're hearing uncertainty. I don't know what's going to happen with my job, my taxes, my this, that. I don't know if you remember, but we used to close a ton of loans with this company. I think it was a Bank of America spinoff called Homestead Mortgage.
Yep.
And I remember many times at closing, because I'd always go to the closings and, monitor the signing and all that. They had a clause where they were dealing with uncertainty. And what it said was, because you went with Homestead and we appreciate your business, if you should lose your job, we will suspend your payments without penalty for at least 6 months, subject to another 6 months if necessary. You don't have to worry with Homestead Mortgage. And I thought that was really cool. And I remember being at closings where sellers, a lot of these were like relocating executives. And again, after 9/11, nobody knew, like there was a lot of movement going on. What was going to happen with all that? They were like really relieved and happy to have that mortgage. So maybe we're going to see some products like that deal with what's going on in the psyche of today's buyers. What do you
Well,
think?
Julie, no, I agree completely. That's the reason you have to learn to be more competitive. That's the reason that Julie and I created the ethical real estate professional designation for you guys. And one of the, without getting into the weeds too much, one of the elements of ethical real estate professionals, you're going to have a package. So there's a pre-listing package that you give to sellers before you go meet with the sellers, and a pre-buyer appointment package that you give to prospective buyers. And one of the unique selling propositions that you're going to deliver to these prospective buyers is, your ultimate goal is to convince them to want to work with you. That's just is what it is. You're competing for that buyer's exclusive signature, exclusive buyer
Commitment.
agency contract signature, right? A commitment. You have something. I don't remember the exact name, Julie. I could look, but the essence of it is if you want to sell your house, if you're not 100% satisfied with the home buyer's guarantee, I think is what it was. If you're not 100% satisfied with the house that you bought from me, I'll sell it for you for free for the first 12 months. And these are the types of thoughts that all of you guys need to start having, because what else are you going to do to really differentiate yourself in the marketplace? So what we've done in Premier Coaching and what we've done in Ethical Real Estate Professional is we've taken all the heavy lifting away for you. We've done all the market testing. We've done all the design work. We've done everything that will be necessary for you to be able to approach any buyer or any seller in this market because of these market conditions and say, this is the reason you want to work with me. This is why I'm special. This is why I'm different. If you don't know what I'm talking about, you guys definitely want to join Premier Coaching. And remember, when you join Premier Coaching, Ethical Real Estate Professional is now included with Premier Coaching. And if you go VIP when you join Premier Coaching, you can actually get Ethical Real Estate Professional right out of the gates. If you guys want to know more about either one of those things, obviously just go to premiercoaching.com. If you want to see what the consumer-facing version of the site is, in other words, what your prospective buyers and sellers will be seeing, as far as Ethical Real Estate Professional goes, just go to, ethicalrealestateprofessional.com, and you'll see that website that we also created for all of you. Julie and I are thinking ahead for all of you so that you can be over prepared for the market opportunities that we are confident are starting now. And this is without a doubt going to be the new golden era of housing. And this is a generational housing boom. A generation lasts 25 years. So that's what we are experiencing now. This has been, for the last arguably 3 years, the bottom of the old market. And now we're entering into the new market, and all these different mortgage products and the things that, frankly, Julie Harris just shared with all of you guys should give you the motivation to really seize what this market has to offer. PremierCoaching.com is your gateway to have all that happen in your life. Anything else you'd like to end with today, Julie?
No, but we should probably warn them about the Friday show coming up.
Oh, yes. Well, that is tomorrow. And so the Friday show, oh my gosh, Julie's got a lot of funny stories. You've been telling me about some of them, about the birds.
Yes. Parrots.
So the parrots. So we like to keep Friday a little bit lighthearted and a little bit, frankly, not necessarily real estate-y. So we talk about all kinds of different things. Oh, you know what we ought to talk about, Julie, is the fact that the JFK files came out.
Yes.
And they got released last night. So I'm really curious as to what frankly, the people that have decided to sit down and read 80,000 pages, what they're discovering, if there's any new information there. But yeah, so the Friday show is really supposed to be somewhat of a reprieve from the normal drumbeat of real estate sales, real estate training, real estate coaching. So Friday's fun. And if, by the way, you guys have, we did have someone suggest that we share with all of you more information about Julie and I's workout. Hey, Julie, show them the guns again. So if you're not on
They're
video,
hiding in the background.
exactly. If you're not on video, you're missing out. But yeah, so we might be doing a little bit of that. So in any event, yes, thank you for keeping this the number one listen to daily podcast for real estate professionals in at least the United States. It is always our pleasure and our honor to be your guys' real estate coaches. If anything else we can ever do for you, if you've got any podcast ideas, if you have any questions, the best way to get hold of us is always going to be over on Instagram. It's at Tim and Julie Harris. So thank you and have a fantastic day.
This podcast is a part of the C-Suite Radio Network. For more top business podcasts, visit c-suiteradio.com.